Ex-tropical cyclone Alfred has left a trail of destruction across southeast Queensland and northern New South Wales. Flood warnings remain in place in Brisbane's south, while showers are set to ease. More than 280,000 households were without power on Monday, and companies have warned residents that blackouts could persist for days. An analysis by Weather Zone suggests Brisbane had its wettest day in more than half a century on Monday due to the storm.
Well, let's get some more insights now on how the insurance sector is dealing with increasing risks such as natural disasters, often on account of climate change. Joining us now is Paula Jarzabkowski, who's a professor of strategic management at the University of Queensland. And Paula, we've sort of talked at length with every incoming natural disaster, be it extreme heat or flooding, that we've seen more and more concerns over what climate change is doing for planning when it comes to these areas. Are insurance companies sort of ahead of this or struggling to keep up at this point?
So I think the insurance sector has been signalling for at least a decade that we do have a problem with increasing extreme weather events, and that is part of the big drive that's putting the prices up for insurance. It's a combination of things. We're getting more and more extreme weather with legacy assets. So we've built in places that can't withstand the weather we're now receiving, and we're continuing to build in those places, as well as perhaps not building as resiliently as we need to. So the insurance sector's been warning of that for some time, and the effects are coming home to roost now, with a lot of people finding insurance either unaffordable or unavailable in these areas that are being hit by increasing disaster.
Do more conversations need to happen around both managed retreat and also, as you say, sort of not rebuilding in these same areas, which was an issue that came up for both those that went through the Black Saturday fires and the insurers who, had issues then reinsuring them in the same locations?
Yes, that's right. So the way that it works is you've got both. Insurance, as it was initially designed, is a pooling mechanism where they take in a lot of premiums across a lot of people with different risk profiles, and the premiums of the many pay for the losses of the few. What we're getting now is the losses of the many, because we're having more and more of these large-scale catastrophes that mean that there's a lot of claims go simultaneously. Insurers buy a reinsurance product for that, which is a product on the global reinsurance market that brings global capital into local economies to do the rebuilding. But increasing the cost of that capital's gone up around the world, as we see things like, fires in LA, which are very expensive. But there's been fires in LA since 2018 in California. We've seen floods here in 2022. Now we're seeing this. All these costs around the world are being paid for from the one big global wallet, and that's driving the costs up for sure locally, but not just in Australia, in many countries.
So rising premiums, and in some respects insurance companies might be unwilling to insure some particularly vulnerable areas at all. And when you put that together, are we seeing an increase in the number of people who are completely without insurance?
Yeah, look, this is one of the issues that has arisen, and it's becoming more concerning around the world, particularly in advanced economies that have relied on people having insurance as the way to underpin their mortgage and securitize their assets, that we're seeing that insurance is either unaffordable, meaning that people simply aren't buying it, or small businesses, or it's unavailable in that it's being excluded by insurance companies from the policies that they offer in those areas. So we saw that in LA, where actually a lot of that fire was already being excluded by the private sector and covered by a sort of government legislated mechanism called the FAIR Plan. We're seeing that here in Australia, where people are simply finding themselves uninsured. And would you like a little bit of an idea of how that's increasing in Australia? In 2022, the Actuaries Institute showed that 10% of Australian households faced extreme insurance stress. The measure of extreme insurance stress is 4 weeks or more of pre-tax income to buy a meaningful premium. I think that's a useful measure because it talks about the whole gross household income, and that's given that you pay from your net income to have 4 weeks of your gross income to buy a premium. That was 10% of households in 2022, 12% in 2023, and now 15% in 2024. And let's see what that's going to be when they update those figures in August this year. But we can see that those problems are rising exponentially, and that probably many people, even if it was only 2 weeks of pre-tax household income, would find that a struggle to cover.